Welcome back to another video. My name's Adam. I've been taking a bit of a hiatus from making YouTube videos, but welcome back everyone. Today we're going to be talking about my biggest investments, which are in Chinese companies, believe it or not. And thankfully they have rallied a little bit over the past few days, especially today, as concerns over Chinese companies are slowly dwindling. But the reason why I've been away is because I've had a lot of work with regards to my master's degree in medical neuroscience, with regards to dawn training. If you don't know what a residence dawn is, just do a quick search. I've had training for the past 2 weeks, and it's just been busy. Life has just been hitting me especially hard lately, but here we are back with another video. So we're going to talk about why Baba, BAIDU, DiDi, all these Chinese companies, even TAL Education Group, which has been hammered, is all gaining market share back today, and whether or not these companies are still a good investment right now. So as we can see, Alibaba is up 7% today. It's been getting hammered, although over the past month, it's still down 10%. And I'm down on my investments in Alibaba by about, I think, 15% in total. It's on my other computer. I'm in the lab right now, so I can't check it. But basically, we see a nice little rally of 9% since last Friday. But still, over the past 6 months, it's down 31%. So not nice to see at all. And if it wasn't for this rally, it would be down close to 37%. Market cap of $465 billion. PE ratio of 20 for a double-digit growth type company. This was all related off of concerns that the Chinese Communist Party is cracking down hard on not only internet titans, but whole industries such as the education industry and what's known as sympathy trading. So basically, education groups such as TAL Education and Oriental Group were not allowed to be for-profit organizations, as China is trying to increase the amount of increase the population because childbirth is slowing and a lot of people can't afford education there, and tutoring services are hella expensive there. So what they did is they basically banned these companies for turning a profit. So as you can see, for example, TAL Education Group it's up 17% today. Whoo, that's nice for my portfolio there. It's down by 93% over the past 6 months because now they're not allowed to make a profit. So basically wiped out billions of dollars in this company right now, and it's down 93% over the past 6 months. Over the past year, down 92%. But I mean, like, very, very volatile when you're talking about China right now. There's talks of delisting these companies, and right now even the Communist Party wants to step up its pressures in terms of regulating even internet titans such as Alibaba. They didn't allow new users to come on DiDi, and DiDi's up 13% today. So there was a lot of concerns, and this IPO'd on the New York Stock Exchange. So the Chinese regulators were like, well, you shouldn't IPO, but then they actually went ahead through it. And if you look at the max chart here, I mean, it's still down 43% despite this nice 13% move today, off of sort of easing of concerns. And China is sort of trying to play nice at the same time as trying to control these massive tech titans that have just a wealth of data available to them. So yeah, that's basically the story. I'm still holding all my shares of Alibaba, BAIDU, TAL Education. I believe that's all the Chinese stocks that I own, and I own quite a bit. I mean, it's again largest by my portfolio weight right now is Alibaba and BAIDU combined together. So yeah, I'm very happy to see this move, and I think like this has happened time and time again. There's a point where I think in 2018 lost around 36% market share before going back up and gaining 130% in the span of 2 years, which is really nice to see here. And this was over, again, concerns over trading and tariffs and increasing tensions in 2018 here. But again, like, if you just held through that, you would have made the cut. So I think now is a pretty good time to buy, especially when it's down by 50%, close to 50% since its highs. I mean, that's, buy when there's blood in the streets. That's what I advocate for. So yeah, and let's just take a look at some more stats here. So earnings per share of 8, which is huge. They absolutely destroyed analyst expectations over the past couple of quarters. They also got hit with a fine, unfortunately, and so they missed Q1 2021. they're expected to make that up in Q2 of 2021. And I mean, if you're looking at the annual results, I believe this is in won. So they didn't earn $717 billion in just the last quarter. This is in won. But just look how nicely that went up from 2018 to 2021. Went from 250 billion to 717 billion. That's like almost like triple right there. And if you're looking at the charts, I just like to look at charts for technical analysis in case some stock is overbought or oversold. If you're looking at the 6-month trend, I mean, we can see if we full screen this, it's just been on a downhill battle, absolutely downhill, from 240 bucks all the way to below $200, and it actually went past. If we zoom in here, it went past the lower Bollinger Band, which indicates oversold territory, and look how nicely it went. 1, 2, 3, 4 candles. So I mean, don't catch a falling knife. But at the same time, if you bought anywhere in between here, let's say you bought a couple at 172, a couple at 157, you would have been rewarded with this nice little increase of 9% here. And I mean, again, that's just one advocation of buy the stock when it's below the lower Bollinger Band, because that indicates oversold territory, and basically sell when the stock is riding the upper Bollinger Band. So I agree that this is definitely one of my higher risk plays. You could say that the stocks could still get delisted, there could still be increased regulations, but at the same time, this is bad for the Chinese economy if they continue to do what they're doing, increasing the regulation, making them share their data or not collect as much data. I mean, this is just not good for China's economy as a whole and will slow things down. So one, they want to express power over companies and show their footprint and leave their footprint, but at the same time, they want to let these companies grow. And I mean, this would hamper innovation in the long run if new companies, new startups would be like, oh shoot, like, I'm gonna go into this, create an e-commerce company, and yeah, the CCP is just gonna reduce all my powers and basically take away all my market share. So I mean, I don't think that's what the Chinese government wants to do. Yeah, that's just my take on it right here. And again, if you're looking at a company with ridiculous growth, just look no further than Alibaba. I don't think this is fully accurate, 731% growth. 20 to 30% growth is more accurate. I think Yahoo Finance did a little error there. And forward PE, I think, is around 13, which is just ridiculous for such a fast-growing company. Same thing with Baidu. It's up by 8% today. This has a PE of 7, not as fast-growing as Alibaba, but still, it's basically the Google of China, and much more. It's getting into autonomous vehicles. So it had the first approved fully autonomous vehicle robo-taxi out in Beijing, with a forward PE, a PE ratio of 7. I believe the forward PE is around a 5, and they just beat their quarterly earnings. So that's so impressive, and I think that just like someone would be foolish not to take a risk in this right now. DiDi stock is up again, yeah, like I said, 13%. So basically what happened after China passed a major data protection law on Friday, analysts said the pace of the introduction of new laws could slow and tech giants can still grow. So that's the whole fear, is that the whole internet and tech industry will start slowing down. But yeah, I don't think that's going to happen. That's not what China wants. They just wanted to impose these new laws. But the new laws might sort of slow down. And these names have been badly beaten up as a result of a tightening regulatory environment for the tech sector in China. And one news article, again, August 23rd, also helping this here, is China plans cross-border accounting, auditing cooperation. So China will engage in cross-border accounting and auditing cooperation according to laws and regulations. The General Office of State Council said, experts said that the move reflected China's inclination to provide a better environment for US-listed Chinese mainland companies by resolving US-China divergences in IPO mechanism, although it still holds to the bottom line of not sharing Chinese firms' accounting documents. So this is, again, another positive step that probably pushed the prices up of these Chinese companies. Yeah, and that's all I have to say today. I still think Baba and Baidu stocks are a good buy. Cathie Wood actually just started increasing her position in JD.com after selling off a lot of Chinese stocks, so maybe she has increased confidence. And I think this could mark the turnaround of Chinese shares. And I mean, I know Warren Buffett and Charlie Munger, they bought shares of Baba well above $200 per share. So this thing should not be trading anywhere remotely close to under $200 a share. I'd like, if you look at the summary, I think the average price target is like, let's see here, is 172. The average is, I don't know what's going on here. But the average price target is basically, I think, like around $350 for Alibaba. So, I mean, that's 2x from here. And I think analysts are onto something. So, yeah, that's all I have for you today. I think I'm still going to continue to buy BABA as long as it's below $200 per share. Let me know what your thoughts are. I'd appreciate a subscription to my channel if you haven't already. Check out the Discord down below. It's totally free to join, as well as like the video as always. So, take care and peace.